Okay, good morning, guys. My name is Gavin. Welcome to Alphachain's weekly market review. So it is the 21st of February. It's pretty much the final week of Feb. We still have a Monday session on the 28th. So the 28th still is a trading session, but this is the last full trading week for February, heading into the new month of March. And boy, has it been a volatile last few couple of weeks, right? So I think at the forefront, the most important or most relevant theme at play is the Russia and Ukraine situation occurring. So Russia looking to invade Ukraine. As you know, NATO gathers speed and more countries are joining the NATO allegiance. We're seeing Russia not having major concerns about this, and now we're seeing sort of an almost a strong chance, a very strong chance of a war occurring in Europe. And as PM Johnson stated over the weekend, this is something that's not occurred since 1940s, since World War II. So this is the biggest concern in the markets, hence why we saw a lot of whipsaw action taking place from last week, because it wasn't like we're seeing, a statement suggesting that war is taking place. It was going back and forth. It's going to happen. It's not going to happen. It's going to happen. It's not going to happen. That's all we're getting at the moment. It seems like towards the latter part of last week, it was pretty much imminent, and we did hear some shelling occurring on the border of Ukraine. But what's taken place overnight so far is that there's, first of all, Vladimir Putin and French PM Macron have had a phone call Sunday evening. We also hear that there's going to be another meeting taking place between President Biden and Vladimir Putin. But again, it seems like there's lots of discussions, lots of negotiations taking place, but it's leading to very little detail, very little outcome coming from this. And as this continues, we're just seeing a much stronger hold of the Ukrainian border by Russian troops. So I think there's another 7,000 or 8,000 troops deployed to the border. And there is this ongoing testing, sort of almost a military training exercise that's taking place in Belarus. So yeah, there's a lot of geopolitical tension at this current moment in the eastern bloc of Europe. So any further news that comes from this, naturally, that's going to have an impact on the markets. We saw last week's probably the biggest week in regards to the markets reacting to the situation that's occurring in the region, in the European region, and that is likely to continue for the week ahead. Okay, so this is, even though we have a 3-day long weekend in the US markets will be closed today, so you could expect a little bit lighter volumes of the market, but any large or surprising factor that comes into the market from a macroeconomic data standpoint, or whether it's a geopolitical concern, that is likely to lead to exaggerated moves with lower liquidity. So just be mindful that with the US offline today, we could see aggressive moves taking place if there is a surprise factor or surprise element that comes through. But other than that, let's have a quick review of the markets where they are. Looking at the S&P 500, let's have a quick 5-day view. So overall, you can see it's in a bearish trend. Okay, we've had a bearish trend, even though we had a bit of a pullback, a bit of a bid taking place overnight Friday session. But the vast majority of this is to the downside. Okay, so is the downside. Well, that is not Friday's session. This is today's session. Okay, so it's a bit of a pullback from overnight session, the Asian session, shall we say? And that's because of the hopes that when Biden and Putin do meet at the next meeting, it comes to some form of positive rhetoric that leads to not a invasion of Ukraine. But again, the market is reacting to every single news that comes through. So it's very important that you need to make sure that you're trading with confirmation as well. Okay, you need to trade with confirmation and not just react on any little news. Okay. But overall, the trend is down. Down. So if we just look at the daily time frame, that way we could just look at the 5 candles. Yeah, so so far it's opening with a bit of bullish sentiment taking place, but you can see the price sessions is bearish. It's broken through a trend line that I had in place on the 4-hour time frame. So yeah, we're doing lower lows. So this is a lower low than the prior low, lower high, another new low, and sort of balancing out sort of around the 4,400 mark there, so testing up to the 4,400 mark, and now we're starting to move sort of lower back down to potentially these lows, the 42.73 handle. Now if we bring it back up to sort of the weekly time frame, this is a very strong level of support. Okay, it's a very strong level of support. If we do break through this, you've got a larger head and shoulders pattern formed. So you do need the breach through the neckline, which will be sort of this level outlined here. But ultimately, it's a very strong support level. It will take a much larger impact from news or macro data that could lead this to the downside. Moving on, let's have a look at the Nasdaq. The Nasdaq obviously will fare worse in comparison to the S&P 500 and the Dow Jones. So the Nasdaq is on the neck, sort of the prior low. Okay, so it's on testing that prior low around the 13,000 or 14,000 figure. So very bearish. Okay, so now it's a double concern with this, right? This is mostly being impacted because of central banks' action, monetary policy action. Okay, their tightening effect is having an impact in the tech stocks. I will probably cover that a little bit later. And then on top of that, then you've got the geopolitical factors that are having an impact. But again, this is a key asset to look at. This is a key indicator to look at purely because we're at a very strong support level for these tech companies. Coming over to that most outperformed asset from last week, let's go to the daily time frame, is gold. Okay, it is gold. And have a look how beautiful this chart is, right? So not only do we have this trend line in place, we have this nice trend line. We've got multiple touches, 1, 2, 3, 4 key touches, and there's a 5th there, right? When we did break out, not only did we break out, but we could see how we broke out, and this is a day time frame. So day 1 breakout, and then day 2 more bullish. On the 3rd day, we had a retest of this trend line. So price action came back to test around the 1840, 1845 handle. And then we had the next bull run all the way up to testing the 1900 figure. So again, round numbers, put importance to round numbers. So markets back at 1900 hasn't gone on to test the resistance, which is the next level of this key point over here. But again, you can see this is where most price action has had halted back in May of 2021. So again, we're testing the 1900 figure. It is bullish. It is likely to remain bullish. Now the fact that we're out of this pattern that had formed, right? So this latter part symmetrical triangle formation, we've breached through the trend line. We've had a retest. We're pushing up higher. So the next break will be when we're back above the 1900 figure. Now, the impetus will come from the geopolitical concerns that we've just spoken about, but this was the outperforming asset now. Now it's a double whammy. Actually, it's a double whammy if you think about it. For not only do you have the geopolitical factor that is coming in line, but what about incoming news in regards to inflation? Okay, incoming news in regards to inflation, that is also significantly important as well. Okay, so coming over to another asset. And we're looking at the oil markets now, just having a quick look through the oil markets. Let's maybe just zoom in actually. Okay, so prices have retraced. Now they have reached a high of 95. Okay, so they've gone on to sort of test the 95 handle. So another sort of round key figure. And from that point, it's failed to breach through any further. It's retraced back to almost testing the 90 handle. In this region on I think that was the Friday session, and the retracement back on Friday's session was largely due to a a larger output expected from Iran, one of the OPEC members. Iran is likely to produce more oil than expected. So that's sort of a key factor that's led to the pullback occurring here. But the other side to it is if there is an invasion of Ukraine by Russia, this is going to lead to more demand in oil, and we could see oil have a asymmetric sort of upside move. We could see a larger move to the upside. And most certainly, we could significantly sort of breach through the 9500, go on to test the 100 figure as well. Okay. Yeah, so moving on from the oil markets, let's have a look at the European markets as well. So look at the DAX on the daily time frame. DAX is back at sort of these key levels lows. Again, back at support, similar to how the Nasdaq we can see up here. So again, we're sort of back at this support, and we're trading in a range. We can see how equity markets, especially in the European equity markets, are trading in this range. It's staying within this range. So it's not like we're seeing a larger correction, a larger sell-off occurring. What we're seeing is price action staying between this range here. So now the type of strategy that you're going to be applying is range trading. When you're trading the range, then you're going to be looking to get out the trades quite quickly when you have a potential reversal, because easily market can form a lower high, as they did say in this region here in August of 21. But the most recent two highs, November of 21, and then you've got Jan of 22, we've seen sort of testing up to these key level resistance around the 16,300 figure. Okay, but we're back at key level support around the 15,000 figure. Just be mindful of this key level support resistance that I've highlighted. And then looking at the FTSE 100, we had the breakout of the highs. Okay, so breakout of the highs. Maybe I'll put a full screen on this, go to the weekly time frame to show you what we're looking at. So this was the trend line we had in place. This is the resistance level we've had in place. But we're sort of failing to breach through the key levels of that I've just highlighted. Okay, so there is very little impetus coming through from this, but this is also a very important week in the UK for UK corporate earnings. We're having a large number of banks releasing their earnings this week. We're expecting their largest profit to occur since pre-2008 in the GFC, the global financial crisis. NatWest, I believe, on Friday reported a very strong positive earnings, even though their shares did come off, but that was like one of the buy the rumor, sell the fact situation. So that there was already impetus for them to achieve those profits, and a lot of buying pressure came in before and speculated before the result, and then the result came in line. So therefore, some profits were taken off the table. But of course, we could easily see this week a breach through this region if we see very good corporate earnings coming through. So just be mindful of corporate earnings in the UK, especially this week, with the banks leading the way. And let's switch over. I'm just going to switch over to the FX markets. Just give me a moment. New share. Come over to that screen there. Okay. So looking at the FX markets. So the first one I'm going to focus on is cable. Cable's pushing up higher. So we are now breaking through. It's tested this level a couple of times. Okay, so we'll test this level a couple of times. I've got this trend line in place. We sort of can see how price range in this region here. I might need to sort of update that. Okay, so we see how we breached through these levels here multiple times and failed to really break through this trend line. Okay, so failed to really breach through the trend line this downtrend line I have in place. Each time it comes through, you can see a whip through it, but no strong positive close here. And the question is this going to be that close now? Or we're going to have the breach through this now? Okay, and what we're looking for is a break back above the 136.50. I want to see price action break through 136.50. We've seen it fail in this region here when we broke through the 136.50, retraced back, retest there, and now we moved back down to those lows. The question is, will we break through the 136.50? Now, the key elements that you need to be focused on, remember, you're always looking at a currency pair, and therefore there's two situations occurring. What is the dollar situation? What's the sterling situation? Well, with sterling, we know that there's going to be rate hikes occurring, especially, we're considering the Bank of England have already raised rates. Are they going to raise rates 3 back-to-back sort of times? Okay, that's the question. They've done it twice back-to-back. The question is there going to be 3 rate hikes coming through? And that's where we're going to see incoming data coming through. Okay, and I believe on Friday we had a lot of a good amount of macroeconomic data that was released, and I'll probably come over to that, maybe looking on the economic calendar. But retail sales that came out in the UK on Friday came in much stronger than anticipated, and that's leading to the probability of another rate hike to a higher percentage than previously expected. So that's why we're seeing a bit more of a bullish impetus when we're looking at sterling. And the dollar's not, it's a little bit lackluster because right now what we're seeing is more flows going into safe havens like the yen and the Swiss franc. So just be mindful of that as well. So just looking at safe haven wise, you've got the dollar there, right? So we're seeing strength wise in the yen, the dollar, sterling. Okay, euro seems the weakest at this current moment. The volatility index still sort of elevated around the 2779. So average lows are sort of around the 20 or below. Okay, so just looking at sort of historically, average is around the 20 and below. But we're seeing elevated levels because of the geopolitical tensions and the risks that brings along. We see now, looking at the US 10-year yield, and I'm going to cover bonds actually. I'm covering bonds in my next session with you guys. I'm doing a deep dive into bonds to give you an explanation of how the bond markets impact the global, how that has a knock-on impact on other asset classes, and how the bond is almost a leading indicator of a potential recession. So yeah, I'll cover that in the next session. But what we're seeing here is we surpassed the 2% mark on the 10-year bond. We surpassed the 2% mark on the 10-year bond. We retraced back, but again, we could see the next push higher. Dollar quite stable at this moment, around the 96 handle or just shy of 96 handle, trading between potentially a range of 96 to 95 handle at this moment. So yeah, those will be sort of the 2 key markets that I'm mostly sort of keeping an eye on. Certainly I'm keeping an eye on the VIX. As tensions rise, if this moves up higher, you're going to see much more aggressive sell-off on risk on assets. And then when I'm looking at the 10-year yield, that's also giving me an indication of the forecast in regards to central bankers. What is their actions? Every time we're going to hear more positive numbers in regards to inflation, that's going to have a knock-on impact in the 10-year yield. Okay, and this later on this week, we do have some key inflation data coming out from the US at the end of the week. Now coming over to one more of my screens, just give me a moment if I get the right one there. Okay, is BTC USD and ETH USD. Okay, so these are the 2 sort of assets we're looking at. I much prefer the Ethereum asset, the Ethereum chart analysis, which is focusing on the charts. Remember, I tend to review Bitcoin, well, most crypto assets on the logarithmic view. Now, we have a much cleaner trend line in place. Okay, we had a much cleaner trend line in place. We had the retracement back up to the trend line, which is around the 3,200 figure, and then we had rejection, strong rejection at this level.
Player disconnected.
It formed a new low, around the 28-27 handle, retraced back up to around the 3150 handle, 3180 handle, and then it's made a new low there. It's made a new low, coming back to some almost test the 2,500 figure, right? It's close enough to the 2,500 figure. The question is, do we see more of a downside? You have to be bearish. If you're not bearish, then you're not following the technicals. You're not following price action, okay? We do have a lower low, lower high, and a new low. We could see price action coming back to sort of this range here. Yet this is an extreme level. This is the extreme sort of 2151 figure, okay? I don't expect price to sort of reach that level. So we may sort of let's discount that information, maybe take in where we can see most of the lows being sort of tested around the 2,300 figure. Okay, so we could see price come back to the 2,300 figure. You could create this into a zone if you wanted to, but the view is there is still more downside risk. Ultimately, okay, there is still more downside risk until price doesn't go on to make a new high and breaches through the 3,300 figure, right? We have to be looking for more shorts, more of a sort of downside move. But if you're long-term sort of investing, then yes, certainly you want to sort of accumulate some of these assets at these lows, right? So they say buy when there's blood on the streets, okay? Buy when there's fear in the markets. this could be sort of, where you see a lot more fear and panic occurring, especially in the crypto space. Again, looking at BTC USD, this did go on, this had a much more sort of aggressive trend line, should we say, right? So in line with these recent highs, whether we did breach through this zone, we did breach through this zone, and I can sort of delete that now, right? And then what is relevant is probably sort of this key level here. This resistance level is more relevant than those other levels. Let's just remove that. So we had a two touch trend line in place over here. It's broke through this region over here. The question is, are we going to see a pullback back to sort of the 4,400 figure and then go into sort of make a new high, sort of like inverse head and shoulders formation, or are we going to see a continuation to the downs and more of a correction back down to sort of the 33,500 figure, 33,500, 3400 figure in this region over here? But you got to look at, there could be potentially more of a downside move, especially in the crypto space. Okay, let me just have a look at the time. Yep, we've got a couple of more minutes. Let's bring up the economic calendar. Let me switch screens. Let's bring it back to number 3. I'll bring the economic calendar. Any questions, feel free to ask those questions now, guys. Any questions, please feel free to ask those questions now. Let's look at this week. Right. Okay, as we are aware, there is a US bank holiday. Okay, so there is a US bank holiday. It's President's Day. So US is offline, less liquidity in the markets. So just be mindful. There's going to be maybe less volatility in the markets if there's no news or no stimulus or any other sort of macroeconomic factors that come into play. But okay, this morning so far, a lot of the flash PMIs coming out, both for services and manufacturing in the Euro area. Okay, let's just refresh this. UK data coming out at 9:30. So flash manufacturing PMI and services PMI, just be mindful of the data that's being released here. Anything above 50 generally means expansion. Okay, it means economic expansion. Below 50 is contraction. So we're already expecting a large, more positive, expansionary number. Manufacturing PMI to come in at 57.2 and services at 55.6. But will we go on to beat these numbers? Okay, that's the key question. The higher, the better the numbers, the more optimistic the economic condition is seen, and therefore we could see a higher rates to be expected by the Bank of England. All of these key factors are going to have an impact on how the central bank goes on to position themselves in the upcoming meeting. Heading over to Tuesday, mostly low impact news. Okay, mostly low impact news. We have the German IFO business climate. We've got MPC member Ramsden to speak as well. He's a voting member of Bank of England. Apart from that, we have a couple of flash PMIs over in the US being released, both for manufacturing and services. We have the CB consumer confidence, and that's about it. Mostly sort of medium impact in the afternoon, low impact most of the day. Just be mindful of the speech that to be expected from a MPC member. Coming over to Wednesday, there's a bank holiday over in Japan, so they will be offline. We do have some Kiwi data. We have some Kiwi data being released, and these are high impact data. Okay, so this is the rate statement. This is the interest rate decision. So not only are we going to get the rate decision, we're going to get a monetary policy statement and the official cash rate to be voted in. They are expected to raise rates by 25 basis points. Okay, so 0.25%. But be mindful of RBNZ, the press conference that will take place 2 in the morning. Okay, I'll probably cover that in the morning as a review, but we'll just have a quick look through. 9:30 a.m. UK time. So we have monetary policy report hearings. That's a high impact event, so just be mindful of that. And then we do have the Eurozone CPI data. It's here on low impact, so just be mindful of going through the entire economic calendar and noting what might be a high impact agenda that's come up as a low impact view here. But this is an important one. Okay, so do remember, when you look at final CPI year-over-year data, that's a lagging data, right? Month-to-month figures quickly allow you to quickly work out what the year-over-year figure is going to be anyway. So the expectation is going to be 5.1%. previous was 5.1%, but just be mindful of this data as well. Another speech from another MPC Bank of England member. Going on to Thursday, we have some US data in the afternoon. So GDP quarter over quarter, unemployment claims, the prelim GDP price index quarter over quarter as well. There are some speeches also towards the latter part of Thursday, but nothing sort of significant here. As the US is going to be offline today, that means their crude oil inventories don't come out on a Wednesday, it will come out on the Thursday instead. Okay, so just be mindful of that. So crude oil inventory data coming out on Thursday. And then Friday probably a very important indicator for Fed members in regards to inflation and how they manage those expectations. They will be looking at the core PCE price index month over month. This is a leading indicator, a very important data for the Fed members. So yeah, so just be mindful of this data as well. And as I've already mentioned, there are still some corporate earnings. Okay, so from a microeconomic standpoint, there are some corporate earnings to be released, especially UK banks in the upcoming week. And then of course we have the Russia and Ukraine situation. Okay, so just be mindful of incoming news in regards to Russia. And that's it from me, guys. We'll catch up in the next session. I'll speak to you guys soon. Bye-bye.